Credit Life Financial Wellness. This week sponsored by My800Credit.com. This is the show about all things credit related, credit building, credit repair, and how to get yourself in position to finance your goals. I'm Jeremy Dysock, FICO certified credit coach with Credit Life.
Good morning, Jared Havens here, CEO and co-founder of Credit Life.
And Brian, that's not me. Where am I?
Oh,
you're
Brian
back there, brother.
I'm back here tickling the keys.
I still say it's tinkling on the keys.
That's what he said.
I've been telling you for weeks. So yeah, how's everyone doing this morning?
I feel great. I'm doing great.
Good
That's
morning.
awesome.
Good morning. We had a great Saturday here in Minnesota. It was
crisp but beautiful.
Yesterday wasn't bad either, but Saturday was really nice.
Yeah, sunny, and we did the.
This morning was cold.
This morning was
degrees.
chilly.
It was cold.
Wasn't it 27? I think.
Yeah, well, it's Minnesota. I mean, it's Minnesota's one of the few states that when you say, hey, Minnesota, you can't do all 4 seasons in 1 week. They go, here, you go, hold my beer.
That is very true.
Perfect. Did you do anything fun this weekend?
I actually was in the office a lot. I did a lot of projects that we're working on, so I was in the office. This weekend, my daughter was with her mother.
Okay.
And so they had actually in Burnsville, there's a place called The Garage.
Yeah.
They did an all ages Halloween
dance type party
thing that she went to.
Cool.
It was really cool. And then Saturday they went to Valley Scare.
Oh, that's the weekend.
Jovi went to
She's
Valley
too young
Scare.
for this.
Now, daytime Valley,
Really?
daytime
Yeah.
Valley
Oh
Scare,
my
or the
gosh.
real one, the spooky one
the
at night?
daytime one probably.
Okay, the daytime one's a little bit more tame.
Yeah, so it was. I wish I could have went, but I just had projects to do. And
No,
but it worked out. It was nice.
Yeah.
We did pumpkin carving. I had my daughter Sarah stayed over. My son Christopher was over. We had my niece, my nephew, and my brother-in-law. We carved up some pumpkins, ate some pizza and appetizers, and watched some scary movies. Had a big fire in the fireplace. It was nice.
Oh, that's cool.
Really great weekend.
Fantastic. Yeah, mine wasn't not nearly as exciting as you guys.
That's 'cause
we ended up having a car shop on Saturday because we had an air suspension on the vehicle on that Jeep, and when that goes out, that's a big deal apparently.
That's a game over kind of thing.
It was basically sitting on the ground, and everybody recommended the age, because we keep our car for a long time, so we get past the payment portion, and we were happy to not have a payment. But it
was a lowrider all of a sudden.
It all of a sudden was. Yeah, it was on the ground. It was something else.
Could they put the hydraulics in and just jump around?
We probably could have done all that, but we went right to Jeep and
Did
said,
you
here,
just-
you guys can probably fix this cheaper than we can.
Right.
And what can you do for us? So
Yeah.
we figured that out over the
Did
weekend.
you get you something blinky and
Spent
shiny?
all Saturday. She went white this time and don't even start. She went with a white vehicle.
I didn't say a
We've purchased
thing.
black vehicles for years now. She went with a white vehicle.
You
like,
can't work
like
here anymore.
Jared's with the black rims.
You guys
and-
can't work here anymore.
See? White with
So-
black
Wait,
rims.
It
just
looks
for the
really
record,
nice, yeah.
it's a credit coach requirement to drive a black vehicle. It's always been black vehicles.
I didn't know that.
Well, then I broke that trend.
Yeah, must have.
What's wrong with you people?
Yeah, because I guess I do still have a black vehicle. But
Right.
what do you think the interest rate is for a vehicle with good credit right now?
That's a good question.
5.
So was it used?
Yes, couple
Okay,
years
used.
6.
3.9.
Old. Very close, 3.59.
Wow.
And and for those listening, it is good to go a couple years old because you've taken the car after it's lost that major brand new off the lot loss. So you get a vehicle that's a couple years old, so you don't get hit as hard. And the interest rates are still great.
That's fantastic.
You get a car with lower miles.
What a great deal on a vehicle.
That's a great interest rate. I love that. That's I would have gone 2 years, but this time I went with the lease for the first time. I like it so far. I really like the lease option, just because when you're always have appointments and driving, and like for us, we're always on the go. I really like the mental convenience factor of knowing that if something goes wrong, it's handled.
We like
way
you.
I don't have that stress.
We like you mentally convenient.
Yes, is that the right? Did I say that right? I wanted to make sure that I had no stress when it came to my vehicle.
That's
I'm going to zoom in on Jared because he is all clean shaven. Look at that baby face right
I
now.
know.
I sussed it up.
I know. Look at you.
It's I'm trying to bring back my youth.
You look young.
I'm trying.
Well,
34. I mean,
keep working
I am
on that.
somewhat young.
All right. So today we have a topic for the show. Last week we did the investigation letters themselves, and the rock out item was to go forth and do likewise. This week, now, because credit's not only made of bad, that's what investigation attacks is to try to see if you can get some of those past derogatories deleted. But credit's not only made of bad, regardless of how it feels sometimes when you look at your credit, but positive activity, positive account management, account growth, and the addition of accounts to round out that profile for building your score. That'll help.
Well, and I was thinking the reason why I like going into the credit building aspect of things is for anyone that's been watching our show and following the Rock Out action items, you know, if you went to yourcreditlife.com, in the upper right, you clicked on the tools section, and in there we have a bunch of vetted resources for DIY credit repair, which then has the 2-letter templates, the Directed Credit Bureau and the 609. And so when you initiate the investigations, you now have a little bit of a waiting game ahead of you. You know, the legal timeline is roughly 30 days plus mail time and other factors. So it's roughly 45 days that you're going to be waiting now on results of that investigation.
We have a coach, Mark, who has coined the phrase credit month. A
Exactly.
credit month.
It's a credit
45
month. I love that.
days. 45 days is your credit month. Mark, I stole that from you. I've started using it. I've been in the business a long time, and well, I just stole something from one of our neighbors.
I love it. That's awesome. That's awesome.
That's great.
But it's good now. You know, this is typically when someone is like, well, what do I do now? Because they're so excited. You know, they're like, I'm taking action, and I want to keep taking action, right? So this is like it's kind of a unique area to be in.
Hurry up and wait.
And so you have to wait on that aspect, but credit building also takes time as well. So you want to be just as proactive on credit building because it takes time for it to report what you're going to go into. That's why it's a perfect episode today. Now that you've gone through and done your letters, you're now entering into introduction to credit building strategies.
Perfect. So,
you know, just real quick, I would interject in there that, you know, getting to this credit building stage is pretty important to look at your budget while doing this. And it's probably next show we should dig into that some, because what happens is as you start looking at ways to rebuild your credit, you have to be very thoughtful of what got you where you are today, and you have to make sure you're ready. And there's a lot of things that you can do to prepare yourself to keep those payments on time, where your focus is just, you know, doing your life, making sure that there's money in that bank account because you're working hard, and setting certain things up on auto pay and all that. So
yeah, a lot of times someone might have had no credit, right? They went through a hardship, they have collections, they have all sorts of stuff, and they don't really have a lot of accounts open, so they no longer have those disciplines, those financial disciplines of making payments and being on top of that. So I agree completely.
So we'll dive into that next week. As I always say, credit doesn't operate in a vacuum. You know, your income is involved, your debts are involved, all of that's involved in it. But this is a great tie-in to this week's Top 5 list.
Woo-hoo!
Top 5 list. We're talking about building credit. So this week's Top 5 list is the top 5 credit score myths debunked.
Ooh.
If you've ever watched myself and Rick Wenner, one of our other senior coaches here, we have been doing a Mythbusters live for a long time. We kind of took the whole busting credit myths idea, but I wanted to take and bring this in because I thought it was an appropriate topic to go with today. So the top 5 credit score myths debunked. So myth number 1. This is myth number 1. I'm not planning to get a new loan or credit card anytime soon, so whatever's happening now with my credit report or credit score doesn't matter. That's a major credit myth. There's a reason. Here's the truth behind it. Even if a new loan, a new card, something like that's not in your immediate future, these are not the only things that use your credit. Your credit is used everywhere these days, not just for the big stuff. It's used for background checks, for jobs, for rentals. If you want to rent an apartment, there are even some tool type of rentals and things. If you're looking to rent something for your business, they're looking at your credit. Credit is used for all kinds of stuff. You know, I tell the story about going to get my red cell phone, and the gentleman who grabbed the other one, they only had 2 at T-Mobile. I got up there and I didn't have to spend any money, and they just put it in the bag and they gave me the phone. He had to come up with $1,000 on the spot, and he kind of looked at me. I looked at him. I gave him my business card. I said, "Look, clearly you need some help." So it's not just for when you're trying to get a large thing. Background checks for jobs, security clearance for the military if you're a service member. So these things all use credit. So it's important to stay on top of this all the time.
Insurance for sure. That was your number 1 on there.
Absolutely.
Insurance. I mean, all the time, if you think about it, insurance is one of those things that you have auto, home, and life. And a lot of times people often shop around on auto insurance. And so, you know, auto insurance is something that you could experience some extreme savings when you maintain a good credit profile.
Without a question. So, myth number 2. Using cash or debit cards for everything is the best way to boost my credit score. That is false. Here's the reality. Credit is simply a history of the repayment of lent money, okay? Borrowed money, essentially. So if you're not using credit, you're not going to get credit for having used the credit, right? If you're not actually utilizing these accounts, if you're not on a day-to-day basis having some activity on these things, what is there to report? There's nothing to report. So while from a financial aspect and a budgeting aspect, and this is where we can even touch on that next week, while using cash for a lot of your purchases, maybe not using your Visa card to pay for dinner, and then making minimum payments on that card and turning that $15 cheeseburger into a $45 cheeseburger by the time you're done, paying interest. So while not using your cards for things like that is a sound financial move, you do have to have some activity. That's why you'll see on here or in the group on free credit repair advice, or if you're a client of Credit Life, you'll often see in your credit builder blueprint us recommending, look, use 1 to 3% of your credit card. Put your Netflix on there, and then just leave it alone. So it's showing activity. And, you're using those things, but it's not, draining your finances.
Exactly.
Now
that's a good myth.
I think so. Now, myth number 3.
That makes sense. Sorry, I want to jump in there. It's that makes sense because a lot of times, I've seen a lot of questions where people, they correlate like their income to their credit.
Right.
And so if there's anyone thinking that way,
we're cooking something up.
Oh, nice.
We're cooking
they're
something
probably
up.
Thinking, hey, I'm showing that I can use this, debit, because debit has the Visa MasterCard logo.
It sure
does.
does.
You know what I mean? So it's like that's probably where those two things can easily get confusing.
The thing is that logo is really just for accessibility. It's to get you on a network. It was the way they got you away from ATM and got you to swipe it at, Target. So myth number 3. Shopping around for the best interest rate will hurt my score. Okay, here's the truth on this. This is both true and false, okay? If you're shopping for the best interest rate on a credit card and you're applying for 50 credit cards to try to get it, yeah, that's going to hurt your score. But
you gotta do the no there.
Oh, yeah.
Oh, that's a no all day.
No means no. So here's the real truth. When you're shopping around, now what are the things are you going to shop around to try to get the best Kohl's department store card? No, that's silly. What you're going to be shopping around for are the big ticket items, like we just talked about the car. Okay,
Sure.
That might be something where they pull credit from multiple lenders before finding the best offer. And what, 3.9?
Yeah, it's interesting because
3.59%.
we almost always do stuff through our credit union. So even before knowing we had to take care of business on the weekend, we went and got pre-qualified through our credit union top line.
So you had an inquiry there.
We had that. Yep, we had that inquiry there, and we got to the dealership, and of course they have to do their own application, even though they work with our credit union, and they found a better rate through Bank of America. So
nice.
That all happens, and you can explain why.
Yes,
That's not a big
absolutely.
deal.
Love it.
So when it comes to the big ticket items, there's 3 big ticket items considered for what I'm talking about here: automotive financing, car financing, loans, auto loans, mortgages, home loans, and student lending, student loans, okay? These are the 3 biggies that you have a shopping window for. You want to get technical and get all Poindexter on me, it's called anti-duo duping. Yeah, I do know what it's called. But what that means is you've got a 30-day shopping window, okay, for student loan inquiries or for mortgage inquiries or for automotive inquiries. You got that 30, they're not interchangeable, okay? A 30-day shopping window where you're allowed unlimited mortgage inquiries or unlimited auto or unlimited student loan within that 30-day period. Now, after that, the FICO algorithm, the math formula that gets applied to that data on your credit report, that is only going to count it as 1 inquiry on TransUnion, 1 on Equifax, and 1 on Experian. So you only lose 5 to 15 points per each, which is what you'd lose if you just opened 1 account anyway. So you'll still see these inquiries, though. They are still there, okay? They're physically or digitally on your report, but they're only counted in the FICO algorithm as 1, 1, and 1. Now, if you're looking at your credit somewhere else, like a Vantage score, Vantage doesn't do that. Vantage, so your Credit Karma, you're going to see big hits, and that's why people are coming to me, oh my gosh, I have all these hard inquiries. I have to get rid of these inquiries. Well, no, relax. No, you don't. You actually do have a way to shop. All right, I'm gonna wrap this up really fast.
Wait, hold on. Hold on.
What?
I just think that's so important what you just said for people to hear. I mean, we got to stress that a little bit more. Anyone that just listened to that, if you went shopping for a vehicle and you saw that your score plunged 80 points on Credit Karma, it did not, in theory, do that to FICO.
Right.
You know what I mean? Like,
stop the
it's
scoreanxiety.
the different scoring algorithm. You know, so what Jeremy's talking about is specific to FICO. FICO does not negatively impact you for shopping to find the best interest rate on your auto, mortgage, or your student loan. Vantage calculates that different, which Vantage is primarily used like Credit Karma and other online consumer-based reporting.
I'll tell you, FICO is the regular system with inches and feet, and Vantage is the metric system. While the metric system, heck, it might even be better. Nobody in the U.S. uses it. Everybody uses FICO.
Yeah, that's true.
That's the analogy for that. I want to pop into actually. We do have to. We're up against a hard break for a commercial. Let's get back to it right after the people who pay to keep the lights on.
The commercial break.
Commercial break coming in from our sponsor at My 800 Credit. They still have the coupon up on their page. I'm going to click on that button.
And what does this coupon do?
You'll get $100 off of the onboarding fee, credit builder blueprint, initial audit, and quality assurance audit that goes into getting someone set up through the VIP credit improvement program with Credit Life. So go on over to my800credit.com. You'll see a little banner pop up. Get $100 off your Credit Life VIP enrollment. Just put your first name, last name, phone number, and email, and one of the coaches will contact you right away.
Why is it important that they do this right away?
Well, we don't know when that's going to pop off there. It's not going beyond Halloween Day, the end of this month. If it were to cut out early, that's just there's only a certain amount of these that they're going to let go through. But right now, it's still available, and we're hoping it'll just stay available through the end of the month, so everybody can take an opportunity here in October to get in at a discount.
My800credit.com.
You know what we should do? It would be fun with the commercials. Is to do them in like a rock voice. Like,
oh God!
What's this lead singer at one that I'm trying to? He's like, you want to save money? Yeah. You want to save $100?
Hello, Cleveland.
I hope I didn't have the background music up too.
Well, I could do it like Ozzy Osbourne, but I'd have to get drunk. I think that's Splenda, or maybe it's sugar that he
how would Ozzy do it? Try
and
it.
then fall off my chair.
Oh.
Try to do the Ozzy.
$100
off.
Oh yeah, no, you
go Shelly, you got $100. Oh, you can use that for the cocaine. I'm using it for the save $100 off my. I'm the Prince of Frickin' Darkness here.
That does sound. That's pretty good, actually. You guys.
Shallin! I'm the Prince of Bloody Darkness. Give me bubbles.
All right. There's our break. Get back to that.
That's our break. All right. So
there.
back to the top five. Thank you. Yeah, this is one of those don't quit your day job, and sadly, this is my day job. All right. So we went through the shopping around. Myth number four. Closing credit card accounts that you're not using, those closed accounts, those will help your credit score. So if I'm not using it, you don't want to have it there, you want to close it. This is one that people hear a lot. This is actually absolutely not the truth.
No.
That's right. No. So here's the thing. If you close these cards, all right, there's no utilization. There's no available credit. You're losing month-to-month activity. You're losing current activity. You're losing history. I mean, you're losing huge, significant swaths of the FICO algorithm. Your balance to limit ratio on a revolving account, a credit card, that makes up 30% of your FICO score. History, length of time that an account's open, that's 15% of your FICO score. Blend of accounts is 10% of your FICO score. So you lose these things if you close it. So you're actually, paying it off is a good thing. If you've got a balance, paying it off is a fantastic thing. But then some conservative, light utilization just to keep it going, it's going to be far better and far more impactful than closing it ever would.
And it is a knee-jerk reaction. I think when people get, some people get stressed out about their credit, they've had that higher limit. I'm just misusing this card. I need to pay this thing off. I'm going to close it because then I won't use it anymore, and they're paying it off. But you have of $1,000 limit,
Right.
and you have $900 that you owe. The second you close that, you have zero limit. So now
Right.
you're completely upside down on that card.
Right.
Major negative impact.
Yeah,
on your
it's
credit
crazy.
profile.
Yeah, definitely don't close a card that's got a balance.
So it's you got to get your mindset right, and you really have to look at where your money is going, because it's real easy to keep adding and adding and
Right.
adding to your expenses.
It's
without
not
looking at it.
avoidance. Avoidance isn't the solution here. It is discipline.
Absolutely.
It is getting a plan and then working that plan.
Exactly. You're spot on. Spending with a plan.
So myth number 5, my income, my bank accounts, my investments impact my credit score. A lot of people think this. People say my DTI, my debt to income, it impacts my credit score. Absolutely, positively untrue. Now, there's something called Experian Boost out there, okay? Experian Boost that'll let you put in things like income and assets and things like that. The thing is, nobody's using that for consideration. That's not part of FICO. That's part of like science fiction or credit fiction. It's not a thing, okay? So all you're doing if you volunteer all your info to Experian Boost is frankly giving them more data about you to sell. And really giving them more things to give to your collectors to say, hey, look, they do make money. Maybe you just want to sue them instead. And so, I mean, there's some really nasty things that are starting to come from that. So, but the important part, bank accounts, income, investments, they don't impact your credit score. Now, while I said credit doesn't operate in a vacuum, these all work with each other. It only works with each other from a, can you afford to pay back the credit you're using? Can you pay down those balances? In that respect, yes, actual money in your pocket can affect the score, but it's not used in the FICO algorithm. And those are my top 5.
It's a great top 5.
My top 5 credit score myths debunked.
Yeah.
Yeah. Yeah.
I'm going to feel left out if everybody starts doing voices.
I'm going to do it. Yeah.
I've got no voices.
Come
to
on, just
do.
throw us a yeah.
No, I don't.
Yeah.
Yep.
Yeah.
Yep.
Yeah. Give us some Barry White. Just drop it down.
There you go.
Hey, baby.
You have to have a
Hey,
rock
baby.
star
I
that
don't-
you try to
Hey,
sing
baby.
I
like.
don't have a singing rock star.
I
voice.
think.
What?
I think I like the look of your
I
credit,
have like
baby.
a.
I think I want to see all your scores. Oh, store that away for some good old-fashioned
I
nightmare
just
fuel.
sing my Simon and Garfunkel. And
There you go. We'll get
No.
there. We'll get there. We'll get there.
Slow
All right. So today's topic.
Oh, my
today's
goodness.
topic is, Jared. Today's topic is credit building.
Yes, it is.
Where do I start?
Well, that's a great
Put you on
question.
the spot. Where do I start?
My100credit.com.
Well, that will give you some vetted
Yes, it
options
will.
that are made for people who are trying to rebuild their credibility.
Right.
That's for sure.
So
Well, I just think that it starts out like, if we go back and recap what we went through with our listeners,
right.
you've gone through, you've pulled your credit report, right, through Smart Credit. You've evaluated what's good, what's red. You've identified which accounts you're working on when it comes to investigations and letters. And when you went through that, you also identified, well, what do I have open and active right now?
Right.
That's a key starting point. It's not just, hey, shotgun and get whatever anyone else is getting me because it looks like it's working for them. Your situation is different. Your situation is not the same as someone else. And so what you want to look at is, what do I have open? Do I have any auto loans? Do I have any student loans? Do I have any credit cards? You want to start there. And then based on that, your current credit status, that's when you can start figuring out certain credit building strategies
Right.
on accounts to access to help build and really, start improving on that.
Let's give a little bit of a rule of thumb.
I was going to go there, I think.
Yep. Let's give a rule of thumb, a little bit of a benchmark, kind of a bare minimum, that when you're going for the majority of things being car loans or student loans or mortgages or credit cards, let's give a base framework that people are going to want to have. And we all, I'm sure in our minds here, have the same base framework. I'll tell you where the base framework for me, where it comes from. When it comes to a mortgage, which is what's usually the largest item someone will buy in their life, a home. It's the biggest ticket item most people will ever buy. Fannie Mae, the government loan, conventional lending, Fannie Mae, Freddie Mac, FHA, VA, USDA home loans. They've got something called a minimum trade line or a minimum account requirement that they look for in traditional underwriting. Now, that minimum requirement happens to be one revolving account 2 revolving accounts. So credit cards, revolving. You can charge them up. You can pay them down. You can pay them off. You can use them again as long as you're happy with the bank. Bank's happy with you. That'll revolve forever. They look for 2 revolving accounts, open and active with a good payment history. They look for 1 installment account. That could be a self-lending style account. Could be a car loan. Could be a student loan. But it's got to be open and active with a good payment history. They oftentimes will look for, it's not a requirement, but we recommend it strongly, a retail account to help blend accounts. And that could be your Kohl's department. That could be your Finger Hut. Could be your Shop Simplio. And they want that open and active with a good payment history. And they're looking for a 2-year credit depth. And that's time. That's how long you've had them. So what's the typical recommendation we'd give a client for just the base core level?
I say 3 to 5 active accounts.
Yep.
That's what I've always said. And I like what Brian brought up earlier. I think that's really important for everyone listening, is that you don't want to get so excited that you pull the trigger and open up 3-4 accounts at a time. You want to do it strategically, not only for the habit building, the proper disciplines that you're going to get by the financial disciplines by managing these accounts, but also if you do this all correctly, your credit profile should be improving moving forward, meaning you're leveling up, meaning you can get access to better accounts. When you're in a situation of poor to fair credit, you're going to get poor to fair credit accounts.
Right.
And a lot of those might have annual fees, higher, fees, whatever it is.
Deposits.
Exactly. Deposits, like a secured credit card. You want to level up to the next level of accounts that don't have those type of things associated to it. Maybe some cashback rewards or something like that. More long-term accounts, not to get you into trouble or to get you into debt, but really about just getting better accounts that can kind of grow with you as you're growing.
I call those like your forever accounts.
Yep.
Your forever account with the Sky Miles, your forever account with the cash back or the rewards that you like. There's a Disney one that eventually, if you get enough points on it, you get tickets to Disney World or vouchers to the Disney store. Whatever, there's a Harley Davidson one through US Bank. Whatever your poison is, whatever your why is when it comes to that, those are the next level ones. That's not typically where somebody's starting, though. Typically, and the thing is, I think this is why our sponsor, that My 800 Credit,
is extremely powerful.
Yeah, really important.
Well, what's really cool about it, if you want to pull it up on the screen,
and you want to show that
Brian,
to people,
is if you go to a certain, are you going to the FCRA one, the one that shows the different boxes?
No,
I can only pull up the window and that's been saved in here.
That's fine. So for anyone,
I can adjust that though.
Yes,
for anyone that's listening or watching in Free Credit Repair Advice or any of our listening, any community, we have specific sections that actually break out an introductory planning of credit building.
That's fantastic.
So My 100 Credit actually put that together for people that are working with Credit Life to make it a little bit easier for you to understand that path. It's really powerful.
This isn't even us giving them a commercial plug. I mean, this is a tool that's going to be very useful for you.
It's absolutely amazing, because most credit card places that you type in credit card whatever search, and it just blasts you. I mean, just blasts you, and it's very difficult to manage and understand what should I be opening.
Well, it's the highest bidder.
Exactly, where My 100 Credit has put it together in a nice, easy to understand, formula, I'd say, of, hey, different types of accounts, go in there and start pulling the trigger.
It's a little hard to see the way this is pulling up in here, but those little boxes actually represent different types of trade lines. You've got installment, revolving, retail, that type of thing. The screenshot I just tried to pull up for you is not quite looking right. But, I wanted to point out one of the things that, as we were saying, when you start the building, that you have to be really careful about is, imagine when you get that card and we talk about maybe moving a specific payment over to it, like a utility bill or something like that. What happens at that point is you've now put yourself in a situation where you've moved one of your bills into a different way that you're not accustomed to paying. It used to be coming out of your checking account directly, maybe by bill pay or check or whatnot. And then you get a credit card and you say, I'm going to start putting my utility bill to that credit card. But if you don't make the proper arrangements to pay that in full each month, you've kind of offset a little bit of money now that you might otherwise spend because you forgot that you're paying it in another way. So that's what happens when you add these accounts. I
always tell my clients that I want them to set it up to auto pay from checking. I'm a huge fan of cruise control. I always like to see with my clients, if you've ever had me as a coach, you'll know this. I'll have you open a Visa, a MasterCard. I'll have you put Netflix or Hulu or Dollar Shave Club, something inexpensive, something reoccurring, happens on the same time each and every month as an expense on that card. I then have you, and for my clients, it's not optional. I have you set your checking up to automatically pay the card when it's due. I keep it super simple. I don't worry about bill cycle, close dates, things like that with my clients. So money goes on, money gets paid. Money goes on, money gets paid. What do they have to do? Sit back, watch Stranger Things.
But when you do that, you need to make sure that if you're setting it up for the full payment, it's something that you already had built into
the budget,
because if you do, like Fingerhut is often one that becomes a recommendation for the retail side of things, because is generally a good approval ratio. The stuff there that you can purchase, and they have a really good ability to increase your limit by proper behaviors. But now you've purchased something through there that's not something you were buying before, and you've added now $50 to your budget that maybe you haven't accounted for. So you have to be very conscientious of all that.
The things I recommend, for my clients for Fingerhut, I always say go in there and look at shoes. You're going to buy shoes for back to school time. Go in there and this time of year look for a Christmas present maybe, because you're going to be buying a present typically somewhere somehow. And dedicate that money. Use that. This is now where your kid's Candyland game came from instead of Walmart.
Well, and I think what it comes down to is a lot of people, what Brian's bringing up on a budget side, is a lot of people operate what's in my bank account.
Right.
That's the thing. So if you start allocating and you're not having a plan of knowing what's coming out in the month, that's where you get yourself into trouble.
And that's why we'll be.
That's when you go, oh shoot, I spent too much going out this week, and I have these bills due, and okay, now I'm stressed out. Like that's the difference,
That's why we'll be going into budget next week. When we say these things don't operate.
And
in
it's
a vacuum.
like even the word budget is like so cringy. I'd say.
Oh, it is cringy.
You know what I mean? Because it's like diet. Hey, it's that's why I like saying now spending with a plan.
Right.
Let's create a plan on how you're going to spend your money.
That's a great way to put it.
Then it's like, oh, okay, because when you talk to people about that, especially if they have goals, then it's so much easier to digest that, I feel like, than saying, hey, let's go ahead and you sit down, and start putting together a budget. Then they're like, ooh, I don't want to do that.
That budget is a sharp turn, because budget says what you're not going to spend. But spending, you're spending money already. Spending with a plan says I'm going to know how much I'm spending and how much I can spend.
Right.
Yeah,
I'm not when it comes to, again, this is talking with with my clients, even the way I do it with myself. I'm not an all or nothing budgeter. Budget sounds like you're going to give up everything that makes life worth living. Right now, I've been doing one with my wife. We've been because we've been paying for some remodel stuff on the house, and like anytime you do some remodels, you spend about 20% more by the end of it than you originally planned on, and things like that. So we're like, okay, we don't want to have to dive back into our assets that we're using to pay for this. So we were saying, let's free up the cash flow. So we took a look, and my budget item is right now I'm only dining out twice a week. I was dining out 10 times a week.
10 times.
I was actually dining out 10 times a week.
Jeremy's a foodie.
By contrast, Jeremy I have maybe once or twice dining out in a month set into my budget.
Well, like when I do dinner, a typical dinner for us will be about $120, $125.
How do you keep those kids? Don't you bring the littles?
Now you a lot of takeout.
Oh,
it'll be takeout. Like I'll grab Porter Creek or whatever, and they get
that. Well, if I'm going to spend that kind of money, I'm going to sit down in the restaurant. So
wouldn't that be nice? Yeah.
But when you got those littles, I get it. Yeah.
I have 7 kids, man. Restaurants in the rearview mirror.
They're of all ages. You make it sound like you've got it's like a Disney show with the kids jumping on your legs.
It is. It's the devil.
Well, his son just decided to sit on a chocolate cake on their new couch the other
night.
He
sat on on Saturday. He sat on a chocolate cake, and then he only got it on his feet too, and tread across the wood floor. He sat on my brand new leather couch, and then sat on one of the brand new pillows for it.
Pillow's gone.
Oh,
leather cleans though.
The leather cleaned eventually, and
eventually.
Yeah,
it was a lot of cleanup,
and that was literally
that is out of a Disney movie, really. They have Disney movies like that, Daddy Daycare and stuff. That's Jeremy's Daddy Daycare. He's having to handle that.
It's called Daddy refills his Valium prescription. That's what it's. Oh no, mom had to go up. She was underwriting some files at the end of the month.
That
they were trying to get those through. So
leave Dad in control of the house.
And she left me while I was sleeping.
Oh gosh.
So you woke up to chocolate. Ah!
Oh, that's just one of the things I woke up to.
Oh my goodness.
That was the fun one.
That's why it needs to be filmed.
Yeah.
That's why it needs to be
I
filmed.
told
you
him
know,
he
we
should
are-
be
we
wearing a
are- we
GoCam
are-
all the time on his
Guys, we got to pay the bills. We're
Okay.
past on our commercial break.
Are we back? Okay.
It's the last
so,
chance. This is getting brought up
Last
because
chance.
it really is the last chance.
Go. Put it on the music.
Yeah, we got to pay the bills.
Okay, just notifying everybody because it's coming up to the wire here. My800credit.com, sponsor for Credit Life and the FCRA group. They have $100 off promo on the onboarding and Credit Builder Blueprint fee. It's an awesome opportunity now for people to get into the program. I might have the music too loud again. You got to figure this out.
Put it to a quarter, brother.
It's right here at My800.
I'm a look.
Credit.com. Look for that little pop-up. Get $100 off your Credit Life VIP enrollment. Just fill that out. One of the coaches will reach out to you right away, give you some insight into the program, see how we can help you and pre-qualify you and get you going. Start the new year out right.
Well, and it's just taking action. A lot of people think that if they schedule a call, they're committing immediately or have something, hey, I have to pay for this console, whatever misconception there might be out there.
Right.
If you are interested in hiring Credit Life as a paid professional service to help you take back your buying power and be approved for that goal like a mortgage, take advantage of scheduling that initial consultation. Take advantage of that $100 off. That will then be applied if you decide to enroll into the program.
Yeah, it's never been cheaper.
It's really straightforward. And I can tell you this, the comments that we receive all the time after just the consultation itself is, I feel relieved. I feel so much better. You can help me. Imagine that feeling. Imagine having that feeling of knowing, oh my goodness, I've just made the right decision. I'm on the right path now.
Yep.
Yes, there's work to be done, but it's like, hey, you're finally taking action.
Right. So that's that. I just wanted to make sure that we kept the lights on because we have a time frame.
My800's like, okay, we're pulling out.
Yeah, we're done.
You guys
Thanks for
aren't
playing.
That's my job to go to these breaks, and I keep missing.
That's all right. It's all right. Yeah, so
forgive me.
If you are interested in hiring Credit Life, hurry up. The $100 off the onboarding, that's going away. Booyah.
Yep.
Oh, yeah, arm off the table.
I'm going to put, you're lucky it's only my arm. Fill in the blanks there in your own mind.
You know what I want to talk about with credit building is, a lot of people have a hard time understanding, like, let's talk about Fingerhut. Okay. Fingerhut, I feel, is a very, very powerful tool for credit building.
Yeah, it is.
And here's why. One, Jeremy talked about getting that retail line of credit, so you're getting that mix going. A lot of times when someone's looking to build their credit, they're either doing like a secured credit card option that then can graduate to an unsecured. You might be potentially getting an unsecured credit card like Credit One or First Premier or something like that. But regardless, you still want to build up a retail line of credit, and Fingerhut is perfect for this. Listen to this. This is very good for people who are in that poor to fair credit standing. There is no annual fee to Fingerhut.
Nope.
Number one. This is huge. Really think about it. No annual fee. They have two different types. You have that fresh start, and then you have your advantage line of credit. And what happens is, dependent on your current credit status, you may get approved for the fresh start, which starts out as an installment account, actually. So they might extend you $130, $180 to then make that first purchase. What you're doing is once you get that, you actually pay $30 immediately towards your first purchase to get it started.
Right.
But it goes towards your purchase. And then what you're going to do is when that first billing statement generates, anytime after that when you paid off in full, you then graduate to Advantage line of credit. And this is the magic, because at that point, they typically, based on your credit profile at the time, increase the limit. It's now a revolving account reporting as a retail line of credit. And then as Brian brought up, when you manage this correctly moving forward, I have literally seen clients go from the fresh start, $130, and in a matter of 12 months, they had anywhere between $2,500 to $3,000 credit limit.
That's aggressive.
It is amazing. And yes, they were doing it. They were, managing it correctly. They weren't, overspending and all that. They were using it. The key is you want to use it.
Right.
Because Fingerhut wants you to purchase from them, right? So you want to use it, but you don't want to overextend yourself either, where it's a negative impact to your credit. You want to walk that line.
They'll entice
Very
you.
powerful.
They'll say,
use
your credit, use it this month, and we're going to increase your credit limit. So they want to entice you to spend.
It doesn't hurt to play that game a little
which
bit.
is totally fine. If it's the right time for you to make a purchase, might as well take advantage of that increase. But then once again, this is where it's a little bit different. You can't really manage it the 1% to 3% with the Fingerhut. But what you can do is just make a small purchase and just pay it off in monthly payments, roughly 3 to 4 months, and then repeat cycle.
This is important to understand with Fingerhut. So if you're doing the fresh start where it's installment, it doesn't matter your balance to limit ratio. It doesn't matter. If you use 100% of the available credit on an installment loan,
For the fresh start.
which is the fresh start. Right?
Yep,
right.
Exactly.
If you do that, it won't negatively impact your score like it would on a Visa card, okay? Now, you make your payments. Now, something to keep in mind, they will change it as long as you've made a minimum of 4 payments. You have to make a minimum of 4 payments, so don't do it and pay it off the next
Nope,
month.
They changed
They
that.
stop that?
Nope.
As
As
long as
soon
you
as
get
it generates the first full bill.
Wow.
That's right.
You
You
guys
pay it
aren't
off.
the only people learning something
Yeah,
today.
well,
So
that was a recent change,
that was
I believe.
it must be.
But that's why I brought it up. That's even more powerful. What
Oh,
you
that's
said.
amazing.
So, like, if you got $130 on there, so this is where you got to think about it. Like Brian brought up, budget.
Right.
What can I afford? And the goal is, in most cases, I want to get to that Advantage line of credit and start
Right.
building overall available credit. So yeah, you have to make a purchase over $30
But
for
you,
sure.
you can buy these tennis shoes you were going to buy anyway. And we all know tennis
Exactly.
shoes are price protected. There's a reason that Nike costs the same at the Nike store as it does at Kohl's when they're finally having a sale, since 1972 at Kohl's, as they do at Foot Locker. They're the same. They're price protected. So when you get something that's price protected, that if you want to sell it, you have to play that game. If you get something price protected like tennis shoes, you're not getting ripped off. You're not overpaying. You're not doing anything like that. You were going to buy them anyway. Now you buy them on Fingerhut. You pay it off. You bought it as an installment, so it didn't matter that you maxed it. And you pay it off, and it turns into a revolving, and you got the best of everything.
Yep.
That's
in
great.
that scenario, I guess pay it down some before it converts to revolving. But the idea is just to make a purchase that makes sense and not to go outside of a spending plan. I mean, you could have a birthday coming up in 5 months. Why not
I
take care of it
do.
now?
He does. He does.
Why
So
not?
does he.
We have Christmas
By the way,
and holidays
if
around the
anyone-
corner. Why not
yeah.
plan
If
for that?
anyone is wondering just what do I buy from Fingerhut, and you can't think of anything, April 21st, both Jared and my birthday.
That is true. It's
So bizarre.
We share a birthday together.
Yes, we share everything.
April 12th.
No, we don't.
Oh my goodness.
No, we don't.
Yeah.
Yeah.
Cut to commercial. No,
Yeah. We don't share everything. That would be scary and creepy, and store that away for
We should
good
be able to-
old-fashioned
we
nightmare
should be able
fuel.
to cut to a black screen when it
Yeah.
gets out of control.
Yeah.
But
Too bad
so-
we don't have one of those dump buttons when
So-
we say something
No,
dumb.
I
we
think
can
that's
just
it's fun though. It's all good stuff. It shows that we're real and
alive.
we're having fun here. But so that was Fingerhut. I wanted to touch on that
Yeah,
because
Fingerhut's
that gets brought
cool.
up a lot, and I would highly recommend checking out My 100 Credit. They have that section there for the retail line of credit for the Fingerhut. Check that out.
I want to say one last thing on Fingerhut.
Oh yeah,
On the fresh start, the shipping is absolutely murder. Guess what? Credit's not looking good. You're paying to play. Once you convert over to the revolving, there are coupon codes for free shipping almost everywhere on the internet for Fingerhut, like all the time. All you do is Google free shipping Fingerhut. They don't do it with the fresh start. They do it once it converts to revolving. So with the
cool.
fresh start, yeah, you're going to pay a bit for the shipping and handling, and you know what? They're taking a big risk helping you rebuild your credit. So it's, they should get a little something.
Yeah, it's
It's
not to
fair.
be compared with like Goliath, like
well
Amazon.
the thing is,
Yeah.
most
Yeah, it's
places
definitely
you
not
pay,
Amazon.
Yeah, the most places you pay shipping except for Amazon.
Right.
Right.
In theory.
Well,
I
at
mean,
Children's Place, because I spend
Well, you got to
Well,
spend
yeah.
hundreds
yeah,
of
they'll be like,
dollars there.
That's something you see a lot. Spend $100 today.
Yeah.
You went there to buy one thing for $25, but if you spend $100, you're going to
did.
save on shipping.
That's what happened.
Free stuff.
I spent $475.
Oh man, you're out of budget.
So this guy is not spending with a plan.
Well,
Or maybe he is.
Sometimes you do, and then
My
you cut back
plan
the
is
next
I just
month.
wanted my wife to stop telling me to go shopping for the kids. That was my entire plan.
But we're almost out of time, so I want to make sure we have enough time to touch on other accounts. Because we've touched on Fingerhut, okay? Another one that I want to bring up that I feel is very powerful on an unsecured side is Credit One.
Okay.
Credit One is a phenomenal credit building account. What I typically tell our clients is that if you're sitting like you have smart credit rolling, and you have your Vantage scoring system, right around 580 to 600 plus is a general guideline of knowing, okay, if I haven't had a Credit One in the past that was charged off as a bad debt or went to collection,
Right.
this is a good account for me that's unsecured. So on a budget side of things, you don't have to put down a deposit to obtain that account.
Right.
That is powerful.
There is an annual fee on it,
There is. Yep.
but it's a great card.
Yep.
The annual fee is not insanity. It's like $70 or something like that.
I think it ranges.
Yeah.
I can't recall. It's I think they even have some that go down to maybe 59 or something like
Yeah,
that.
and that's
I think.
this annual
they have
fees
like
from
3 different ones.
$29 on up, depending on
Right.
the card.
Yeah.
But keep in mind with this card, one thing I've seen with Credit One is they are very aggressive about if you do the right thing, you pay your bill on time, giving increases. I've seen people step up very fast with their available credit there, and that allows a couple things. Number one, it allows in the FICO algorithm that pool of available revolving credit, which is good. But it also allows you to get a little bit more realistic about the recurring spend that you put on there. I mean, if you've got you're at $1,000 now for a limit, and you're able to now spend $10 to $30, you can put your credit monitoring on there. You can literally have your credit monitoring, the thing you use to watch your score go up, be the thing that helps make your score go up.
Mm-hmm.
It's cool stuff.
Yep. Yeah, it's a great account. And once again, I'd say if you're sitting around, let's just say to make it easy, 600 plus on smart credit, your online credit monitoring, and you have not once again had a credit one in the past that went as a bad debt, that's a good account. Now, if you go through My 100 Credit, the link on there is a pre-qualifying link, which is even more powerful and amazing.
Yes.
So if you click on that and go through there, it's going to come back and state, yes, you've been pre-approved or not. If it comes back saying yes, pre-approved, you can feel more comfortable to then move forward with the application.
And that's without a hard inquiry.
Yep, until you move forward with the application.
Right. That's cool.
But at least you can apply with confidence at that point. That to me is the difference. It's like instead of just randomly applying because, there's a little bit of a difference between that link and let's say just getting a random thing like in the mail. You know what I mean?
Yep.
It's and don't get me wrong, they're somewhat similar in the pre-approval realm, but they've pulled your information. You know the general guidelines. You're more informed now. So it's easier to make a better decision.
Yep.
That's why I like that.
Let's bust in really quick into installment. I don't think we hit on installment loan. There's two things that we always recommend to people. There's two flavors out there of self-lender, of lending on yourself, essentially borrowing but not borrowing. Do you want to explain that kind of to people quick?
Yeah. So once again, within My 800 Credit, there's actually a section. Do they call it credit building?
Or installment?
It's probably installment.
Installment. Really cool options. So in there, you're going to see self-lender,
right,
which has been around a little while now.
Mm-hmm.
They actually, when they first came out, a lot of people didn't fully know how to handle it. They're very online driven. They're online bank in a way. And so they took the world by storm, so to speak, in offering this opportunity to essentially build up a savings account that reports to all three bureaus. So it's a forced savings account is how I like to word it. You choose the terms, how much you want to put in per month. Yes, there's fees associated to it. They are a bank. They need to make money. But in the end of it, you get back that money, and then you've now built up credit history.
Right. You're tucking money away for a rainy day while building installment payments. What I do with it, I've been running it ever since they started. I've just been flipping one every year to make sure I'm up on their terms and stuff.
Yeah.
Mine just paid out. I do it so it pays out at the end of October, right before Black Friday. And with the one I chose where I get $1,000. So I tucked money away to get to that $1,000. And right before Black Friday comes, I get $1,000 cash injection in my pocket, and then I open another one up for next year. I'm using it as a Christmas account.
That's cool.
And my Christmas account, is building my credit at the same time for a very small amount in fees. It's like $40. I mean, it's literally negligible over the year. It's nothing. I don't even feel it. There's no pinch, nothing. But I've got $1,000 cash. So when everyone does their crazy Cyber Monday and Black Friday sales and things like that, I've got $1,000 that I've put away. And yes, I used credit to get there. I built credit to get there, but then I get the benefit of paying cash and not having to owe on that.
Yeah, it's really cool. Credit Strong, is they've come out, and I'm really an advocate of Credit Strong for
They're
many
very
reasons.
strong.
They are very strong.
You can just go right to opencreditstrong.com and check it out. Now they've launched quite a few new products, but
that's what I want to talk about.
Yeah.
I mean, this is the power of their additional products. This is where there's been some confusion because they're new products, so you have to get used to it. Now, you have what's called like a build and save, right? So that's going to be like self-lender. Mm-hmm. You get $25 a month, $48 a month, whatever it is. You're building up that savings for a certain term, and you then get that back, right? Now, same theory, except now they have more products that are going to build up longer length of credit history, as we know is very important. And so I believe it's 120 months.
Up to 120
months.
That's
that
10
you
years.
Can now build. Yes, exactly. So what you're able to do there is knowing that is such an important part of the FICO algorithm as well as lending. Mm-hmm. Here's an opportunity to still build up a savings over time, but you're building up much longer length of credit history.
So if you've got kids who are gonna, who are 8-year-olds right now, they're gonna be going maybe to college in 10 years. You open one of these things, you've got a little extra money tucked away.
Exactly, and it's what's really powerful about it is that they still have the build and save, which is still amazing.
Right.
Very much amazing. 12-month term, 24-month term. What we just talked about, just like self-lender. But once again, if you're in a situation where you don't have a lot of history in your credit report, these products are extremely powerful because now you can be tucking away just a little bit of that money. Yes, there's fees associated with it. It costs money to report. They're also a bank. They have to make money. That's just obvious. But you're going to build that up over time. And to me, that's great. It's a forced savings, a longer term type option. You're building up more length of credit history, positive length of credit history. And here's the last thing I'll touch base on it. If you're someone like a small business owner, if you're someone wanting to get into real estate investing, if you're someone that does sort of commercial real estate and you're needing to build up a stronger credit profile, this is the difference between score versus profile. They have that Magnum option, which is significantly more per month. But and yes, the fees are higher because the larger amount. But check this out. This is where when you go through and apply for, say, a commercial loan or business loan and they pull your personal, they're looking at it far more than just your score. You have to meet requirements that are very different than other personal type lending options. You need to show the ability to handle what it is that you're applying for. So that Magnum options are for someone tailored like that. I'm looking to get an account that shows that I have the ability to handle a larger amount, a larger payment, and you're still building the history. Absolutely phenomenal what they're doing.
Nice.
For most of us, it would be the build and save and the general subscribe, which is like a $15 or $30 plan, which you have a longer period of time. And the way to look at the differences between those two is if your credit-related goal like home purchase or auto is more than a year out, you can go with the subscribe and get a longer term. But if it's shorter, you're planning on purchasing within the next 6 to 9 months,
build and save.
Then build and save because you're going to get it started faster, and that one will, end in 12 months.
That's
cool. I love it.
Wow, guys. So let's recap some of this stuff up.
Yeah.
So we're the next step in this process. It's building your credit. It's we want you to reflect on when you went through and you made your credit report red and yellow and green. Red is bad, yellow is questionable, green is good. We want to round out that green. We want to add to that and make sure we've got a good credit foundation there. We've talked about a good credit foundation really typically at its very core will consist of 2 revolving accounts, open and active with a good payment history. Those are credit cards. 1 installment account open and active with a good payment history. That could be that self-lender, a car loan that's open with a perfect history, a student loan that's open with a perfect history, the Credit Strong, those programs. You also want to have, just to show the ability to handle different different sorts of obligations out there, you want to have that retail card. That's your Finger Hut. That's your Shop Simplio. That could even be Kohl's. That could be whatever. You want to have those. So when you're reflecting on your credit, when you're looking at these things, you want to make sure that you've got those. If you don't have them, we've got the site who sponsors us, that my800credit.com. You can go there and there will be an area that says revolving. Well, those are credit cards. You can click on there and all those accounts in there are vetted by us. These are things we recommend professionally to our clients. You can go to that installment section. All of those there, they're vetted by us. Those are things that we recommend professionally to our clients, so we recommend them to you today here as that base foundation. With that in mind, knowing that the building is as important as the elimination of the negatives, if not more. You've done your letters. It's time to build. With that in mind, Jared, what is the rock out action item for this week?
So the rock out action item of the week is to recap and go through your credit report so you can understand your current credit status and find out, what do I currently have open now in good standing? Do you have an auto loan? Do you have a student loan? Do you have any credit cards? Do you have a retail? Now, based on what we just discussed here today in our episode, you need to identify that minimum requirement Jeremy was just talking about. Do I have 2 revolving accounts? Do I have at least 1 retail? And do I have at least 1 installment? If you're missing one of those, that's when you want to check out My 800 Credit and then fill the gap. That's going to be your rock out action item. And then on top of that, I'd like to take it a step further for you gung-ho people out there that like to rock out.
Yeah.
Make sure that you evaluate your spending and understand that what's going to be your monthly, and make sure that that's something that you can afford to put into your spending plan and your credit building. Now, I can tell you this, most people, I'd say at least 90% can afford these things.
Cool.
And even if you feel like you can't, it's probably because you're overspending somewhere. Starbucks, McDonald's, gas station, whatever it is.
That's not free.
Exactly. So it's like, I wish it was, but it's that's what you have to look at and be real with yourself and go, okay, I need to make some sacrifices here so I can start building my credit. And trust me, it's going to be well worth it because, I talk about this a lot. Actually, hold on. Before I do that, I'm getting a little excited.
Yes, you are.
That is your rock out action item. Okay, I don't want to confuse anyone.
So rock out action item.
Take out understand. Do you have the 2 revolving, 1 retail, 1 installment? If you're missing any of those, fill the gaps. That is the rock out action item. And then to take it a step further, make sure you add it to your spending plan. Okay. Now, I lost track of what I was going to say. It was going to be really good.
I did that other
but
time.
I wanted to make sure because I know that if I get on a tangent, I'll just like run with it all, and then someone will go, "What? Wait, what did he just say?" And so I wanted to stop myself.
Rock out action item for the week: 2 revolving, 1 retail, 1 installment. If you don't have them, get them.
Yep.
Where do you find them? My800credit.com. The people who sponsor this show.
Yep. It'd be great if maybe put in a request to My800 Credit to add in like a Credit ROCKSTARS specific page. That'd be easier because they created the pages for free credit repair advice and Credit Life, where what we talked about is kind of laid out a little bit easier.
We'll make you a Rockstar page.
Credit ROCKSTARS, I feel like.
Yeah,
we should submit a ticket.
Still working on the Credit ROCKSTARS page itself, so we'll.
Oh, that's true. Yes, so that's going to be great because a lot of this value that we're bringing to our listeners, to be able to have an area that they can go to take advantage of these things.
Right.
It'll be so nice.
Right now to watch them, you have to go to Credit TV on YouTube. And by the way, if you guys have not subscribed to Credit TV yet, you're missing. You got the
really
Credit
ROCKSTARs on there. All the lives
all
of our professional credit life coaches, certified coaches do.
The little snippets, the educational snippets on how to do a credit machine cascading versus
Mythbusters.
Mythbusters.
That Jeremy was talking about earlier with Rick.
We had our bad ideas where we ate hot sauce and habanero peppers. We've even got the class we taught from Minneapolis.
I want to do that one again and take it up another level.
We're gonna have to. All right.
What I want to do
next level
is, I don't know if you guys have seen this. There's a really, really, really popular podcast where this guy interviews celebrities.
Okay.
And along the way, they have chicken wings, and every level goes up hot sauce.
I am all about chicken wings. We should do
a variation of that.
I'm so okay with that.
Woo!
I'm so okay with chicken wings.
Rock out!
Especially if Credit Life's paying for them.
I'll just monitor.
Awesome. So, guys, comments. And if you have any comments,
comment.
If you've got comments, throw your comments down in here. If you've got questions, you can throw them in the comment section of the video. You can throw them in the comment section where over on YouTube on Credit TV. You can also email us if you want. You can message us in the free credit repair advice group for questions, anything you'd like to see added to the show, addressed in the show, things like that coming up. And then, I'll tell you what. We're wrapping up. So next week, we're going to be taking a look at your spending. We're going to take a look at your spending plan / your budgeting. Other than that, everyone, keep in mind, every single Monday, we have got Credit ROCKSTARS Monday at 10 a.m. Central Time. That's 11 Eastern. That is 9 Mountain. And that is 8 a.m. Pacific Time. Check us out. Make sure you check out Credit TV, CREDI-TV on YouTube. Make sure that you subscribe there. If you have not yet liked Credit Life's page on Facebook, make sure you get on over there. And if you're not in the free credit repair advice group on Facebook,
request to join.
I tell you what, I don't know why you're not there. But for Credit ROCKSTARS, for Credit Life, I am Jeremy Dysock, FICO Certified Credit Coach.
And I'm J-Rock. That's my new name on the show. I'm
J-Rock.
J-Rock.
And the Credit Godfather back here on the keys.
Yeah.
Ending stream. Thanks, guys. Appreciate you listening.